Good morning, everybody. I am Spencer Israel, Stock Market TV. I'm joined by the one and only Steve Straza, the new Chief Market Strategist at All Star Charts. Steve, good morning to you. It's a great day to talk about market volatility because we've had a lot of it, and you have been slaying that dragon these past few weeks. So we're here to talk about that. Is that a fair assessment of what you've been doing?
Absolutely.
Okay.
I'm so excited to be here talking about this today. I love a quiet Friday. Markets
Mhm.
closed, right? We can
Mhm.
focus on process, kind of look back, talk through how we've navigated this year. So happy Good Friday, everybody. Thank you for joining us today. And the truth is, I love the title here. I think you must have just changed it, Spencer, because of what I was saying off air. This truly is the perfect strategy for the current market, right? It's a fast market, wild swings in both directions. We're buying, binary call options, betting on big moves. We can make money on the long side, we can make money on the short side. And the bottom line is, in times where the S&P 500 could move almost, double digits, 10% in a single day, like it did last Wednesday, that's the time you want to be deploying a strategy like this. So that's what we're going to talk about today. Why don't we dive right on in?
Let's set the table. Talk about sort of where your mindset was a month ago, where it is today.
I think the market's at washout levels, right? What exactly that ends up meaning, we'll talk about. It could mean really one of two things, in my opinion. But we're totally washed out, whether it's sentiment, the historic oversold conditions, right? This has been a bear market, a bad bear market, right? By all measures already, right? So we think a historic bounce is coming, right? And whether it ends up being a bear market rally, Spencer, or the beginning of a brand new primary uptrend, right? And we're headed higher off to the races, we'll find out when we get the data. We can trade it either way. The point is, the selling is exhausted, and the best opportunities come in bear market bounces. They really do. So that's the bottom line. For now, that's what we think this will be, right? Maybe it morphs into something more in the future. That'll be great. We'll trade it accordingly. But a big, big bounce is coming. And just last month, we didn't feel this way, right? We felt very, very different. We turned bearish from a primary trend basis and very bearish on a tactical basis. And we nailed our shorts, right? We absolutely killed the sell off. I think our average excess return was 600, 700% on about seven different put positions that we put on. And the warning signs were clear as day. And now I think the warning signs in the opposite direction are coming clearer and clearer, with every passing day. And I think it's time to nail the turn. And that's really what I want to talk about today's video.
All right. So let's talk about that. So this is a chart. I mean, this is the S&P, obviously, right? But this is showing sort of how far we've come off the highs.
Look, we're already back to the prior cycle highs. This is where the market peaked out and rolled over back in late 2021, early 2022, right? Back there to the scene of the crime, almost across the board. We could look at so many different important indexes, major averages. They're all there or worse, right? So you got that big retest in the books. Bulls showed up where they really needed to, right? That was the last line of support, called 480 in the S&P 500. Another thing is that anybody who's just coming around telling you it's, big nasty bear market now, it's been going on. It's been going on all year, right? The selling is nothing new. We're already down to over 20% at last week's lows, right? So it's not a new bear market. Beneath the surface, the average stock in the S&P 500, NASDAQ 100, been down more than 20% for some time now, right? So this is not some brand new bear market. If you were prepared for it and you knew it was coming, you could have made money on the short side, but now is not the time to kind of press shorts or just get short here. I think that's very dangerous. I think that's almost the last thing that you want to do. I think you want to position for a bounce. If it rolls over, then sure, get short again. But the easy money was already made on the short side, Spencer. This chart shows that.
Let's talk about the warning signs that you saw though, because you did kind of pivot the whole portfolio over the last what, like 4 to 6 weeks, and take very different kinds of trades. So let's talk about what you saw then to make you think that.
Hold on. First, I want to go through the oversold conditions, right? This
Yeah.
is what shows you that we're completely washed out. This is the percentage of stocks that are oversold on the New York Stock Exchange in this chart here. Am I looking at the right chart? Yeah, yeah. Okay.
Yep.
Over 56%, that's huge. We haven't seen a reading like that since the pandemic lows, also since 2018. So we're getting these primary trend bottom signals, right? Across the board. Look at this next one. This is our favorite. Been using this every cycle for as long as we've been doing this. When the percentage of stocks This is in the S&P 1500. You could use it for the different universes. But when the percentage of stocks that are above their 200-day moving average plunges below 15%, that is a huge signal, right? That's you only see that at the deepest, darkest times in bear markets. And then when that 15% line is reclaimed and that line starts moving back higher again, that's one of the most reliable bottom signals that we have. It does double dip sometimes. We'll talk about that, right? But that's where we are, completely washed out, exhausted. You see the S&P 500 now here. You get these massive moves to the upside in bear markets coming off of bear market lows. We had that last week, right? Last Wednesday with the 10% day, 9.5% day in the S&P 500. And then you're right. Spencer, we've been out here on the morning show every morning, writing in our different blogs, writing in the Straza letter, writing for Breakout Multiplier, talking about it in all of our products that we were bearish. We were bearish in February. We were bearish in March. Bitcoin and cryptos were a big tip back then. So here's some blog posts that we wrote about. We were using the VWAPs from the August lows. That was up around 575 in the S&P. So it broke a long time ago. And it was really these big tops, right? If you kind of keep moving along here to the semiconductors chart, we'll go back to the August VWAP. But these tops in groups like semiconductors and home builders, I mean, the way I was kind of taught when I was learning technical analysis is the home builders and the semiconductors, I mean, they're more important than the banks these days. They're better than Dr. Copper when it comes to a risk on signal, when it comes to an offensive group, when it comes to basically something where you'd say, if we lose this one, we probably lose the whole market. Home builders and semiconductors are literally the top two on that list. Two of the absolute most important from an information perspective, absolute most important industry groups.
So I just want to be clear with these charts that the red circle, that's when your opinion changed, right? That's when you thought, oh crap, we really need to get bearish here. We really need to put on some bearish trades, right? The red circle.
Absolutely. And we wrote about these back in March. And we said, these are massive distribution patterns, multi-year primary trend topping patterns, right? What these chart patterns say to us, and like I said, they're textbook. This is exactly how they teach in the book. If those are completed, right, patterns, then it's a new bear market or a new downtrend for these stocks. And then the way you also learn it as a technician is that from an intermarket perspective, you don't really have a bull market, right, for the broader market without a group like semiconductors or without a group like home builders. Home builders, I mean, that's the housing market, Spencer, right? I don't have to tell you, that's one of the greatest leading indicators we have as market professionals, right? So if you're going to lose housing, you're going to lose the home builders, you're going to lose the semiconductors, which is the lifeblood of the modern day economy. You're going to lose the whole thing. So we saw that coming from a mile away. Those were really the warning signs that we needed. Then we went and we looked at these VWAP levels. If you go up a bit, the VWAP levels from the August lows. Remember last August, all the volatility? We haven't seen volatility since, like the volatility we're seeing today since late last summer, right? And that VWAP ended up putting a cap on selling time and time again over the course of the past 2 quarters. Then all of a sudden it broke. You could see with the red circles. It broke and we got a classic retest from below on all of them, S&P, NASDAQ, Dow Jones, right? And it failed miserably. That's when we knew, okay, bears are taking over. Let's put these puts on. And we did. Let's look at some of the put trades that we put on.
So I just want to comment. So August 5th, that was the whole yen carry blow up, right? But it doesn't matter why that happened. What matters is you got that low, that very clear low candle, and that was what you anchored to. Now that was what, 8 months ago now, right?
You want to anchor VWAP, Spencer, to big pivot points, right? Big pivot lows, big pivot highs, big volatility events, big news events, right? FOMC announcement days, CPI announcement days, when the market gives you some sort of volatility or, above average volume, you anchor VWAPs from there and just look at how good the market just kept reacting to this level over and over and over again. When these levels broke, and Spencer, they all broke within like the same 2 or 3 days, right? So it's one of those situations where you just make a list. Okay, the S&P went, NASDAQ went, Dow went. Oh, look out. Then we got this textbook retest, which was really a gift. You don't always get that. And we slammed it from the short side. So what did we do? I mean,
I'm asking you.
We went to the biggest offenders, right? We went right to these tops that we're talking about. Bitcoin printed a cute little tactical top pretty early on. Didn't get as much follow through as some of the other groups, but we sold a quick double in Bitcoin. That was actually our first put position. So we bought the IBIT puts. We paid about $1.64 For the April 17th, yeah, it just expired yesterday. For the April 17th 46 puts, look what happens next. Bang, get some follow through. We're able to sell those for about a triple. Next chart. Yeah, beautiful.
Right there,
Okay.
right there. Ooh,
Then these
wow.
other started printing. This was the first one. Now, a week or two later, we see these tops and stuff like biotechs, right? Look at that VWAP and the biotechs. What a perfect level. So we bought the 425, what is that, 83 strike puts. We paid about $1.20. Look at the volatility squeeze indicator in this one. And then look at, wow, look at that surge. That's why we use the volatility squeeze indicator for this, because that tips you off to when that big move is coming. And then we go and we look at the price chart, the trends, the VWAPs, right, and different indicators to determine in what direction. The thing about the volatility squeeze indicator on the lower pane, it tells you volatility's coming. You have to decide which way. So we nailed the direction in all of these. Biotechs ended up being a great trade. Those are worth, what, 15? What did we pay? $1.50. So that was about a 10x on the biotechs. It's also, Spencer, what I'm proud of the way that, we traded this turn was the speed at which we made these profits, right? We sold doubles almost immediately, and it was a scary tape, right? Markets down 4 or 5% every day. It's a tough tape to be in on either side, right? Because when you're down 5% in a given day, it's only a matter of time before you're up 5%. Right, and you give back some of the money that you made on the short side. We sold the doubles so fast. What that does is it takes our risk capital off the table. We don't have to worry about what happens next. If the trade turns against us, we don't lose money. We'll never lose money. So we sold those doubles really fast, kept taking our risk capital back to redeploy it into new opportunities, and then we let them run. And look, you never know what's going to happen next, but we got that big sell-off. We got that big plunge. We knew the market was vulnerable, and that was a big possibility. It happened, and then we cleaned up, and we had huge multi-baggers on a lot of these. So regional banks was another one. We had this really clear level here. That's the retest I'm talking about on the August 5th VWAP. See that little retest in regional banks? That happened at the same time. Bang, we figured that's a great vehicle. So we took the regional banks, the 417.56 strike puts for about $1. They went 9x. They were worth about $9. In what?
And the crazy thing is, this is all happening in days. This is not weeks, right? This is days.
That's right. I think our average days to double was like 8 or 9 on these trades, so pretty solid. Next chart. Micron, right? Why not go to the semiconductors? We got to go to the semiconductors.
We're talking about the semis. Yeah.
Talked about that big top in the semis. Look, Micron was a laggard, sporting a big old top that looked very similar to the top at the index level for the semiconductors. We said this one's perfect, so we got long the 516.80 strike puts. We paid about 265. Bang. The puts were worth almost 20 in no time, right? So we cleaned up on that, took some quick profits, and then took some big profits about a week later. Homies, you got to go to the scene of the crime, right? We're not going to turn bearish by looking at groups like home builders and semiconductors and then go short something else, right? We're going to hit these groups for sure. So we hit the home builders, didn't get the follow through that I hoped for, right? And this is actually one that I'm looking at now, Spencer, and thinking, well, we could flip the book long on the homies now and try to trade this a failed top. But the puts ended up being worth about 1080. I think we paid $1, $2 for them if you flip back to the last chart. What did we pay for those? Yeah, $1.50.
I want to be clear. You paid $1.40. They're worth $10 right now. But I want to be clear. Like, you could say, oh, you guys are cherry picking. Everything went down pretty much in the last month. Everything went down. And yes, that's true. But Steve, what did you see specifically with these 4 or 5 names that made you go, okay, these are the names that I'm going to buy puts on?
Because of the way this is a leverage system, right? We're trying to make a lot of money on these trades. So they have to check a lot of boxes. So we can't go everywhere, but we can go a lot of places. We can also get creative. 99% of the time, I get what I want in terms of vehicles, right? Because you get used to them, you know where to go, you know what to use in times like this. But I need to make sure that there's ample liquidity in the options chains. I also mindful of the price of the underlying, because if the price gets too high, it really starts to skew the position sizing. We try not to pay more than $250 per call contract or per put contract. What that allows us all to do as traders is buy 4 of them, right, for a full position size of about 1,000. And if you equal size your portfolio that way, it's great. And it also gives you the flexibility in getting out, right? Because if you buy 4, you could sell the double, you sell 2, and then you still got 2 left, right, that you can manage your way out of. So we look for all that. And then we took the risk on vehicles, right? Because in a bear market, when the market's about to top out and roll over, you want the high beta stuff. You want the juicy stuff. You want the banks. You want the biotechs. You want the builders. You want some tech. right? So we went to all those areas. Micron's even got a little China in it, right? Caught up in the tariff stuff. So we're mindful of all of that when we're putting these trades on. We're also mindful of things like earnings that are coming up or potential catalysts to move the direction of the trend, right? Against or for us. We're thinking about all those things. And now we have earnings season just around the corner, Spencer. So to the upside, we're looking at whenever we buy new calls, we're saying, what's the earnings trend like here? How did they react to earnings last quarter? Because the earnings beats, sometimes you get a 15, 20, 30% pop in something you already sold a double in. That's how you get some of your biggest winners in this system. So we always like when earnings season is here.
All right, so let's just talk about sort of the activity from the past few weeks. We kind of ripped through all those trades pretty quickly. We didn't really go too in depth on the setups or anything, but this is just a chart kind of showing the days to double, right? And then the maximum return on those puts for each of these six, I guess that's seven.
But what you see in this chart, Spencer, if you look at the blue bars, I mean, the days to double, the longest one was about 8 days. ITB was 2 days. KRE, 3 days. XBI, 3 days, right? So we sold these doubles with incredible speed. And that is, when it gets to a super volatile environment, I start caring more about selling a quick double than selling an eventual multi-bagger. I want the double first. If I get the double, I'm good. We can take more shots at multi-baggers in the future, right? I want to secure that double. So the fact that we accomplished this with such a low days to double average number, I think is awesome. That was great. And then the average excess return on some of these, right? Like I said, that's always the big question mark. How much do you really get? But something like biotechs that got absolutely blasted and they go more than 10x for us, that's awesome. That can make your week, make your month, make your quarter, and it can make your year if you do it this consistently.
Because when you sell the double, it makes it so you really can't lose on the trade. You really can't.
Selling the double is a superpower because you know what it does, Spencer? It frees up your monkey mind from making crazy decisions, right? You get to operate knowing no matter what happens, worst case scenario, I'm not going to lose money. In fact, a lot of times we try to sell a little more than a double, right? A little 250% be great. 150, I'm sorry, percent, 200%. Then you could sell a double. And even if the rest of them go to zero, you made money on that trade. So it frees your mind from worrying, right? And then what you do is you end up letting it ride. And when you let positions ride, you get outsized winners. And that's the whole idea to selling a double. It's to free up your psyche, to not worry, not take profits too soon, right? Not leave a good trade too soon. Say, oh, I'm good either way. Let it run. And then you get a 10x in something like XBI.
Yeah, and this table kind of shows all that, I think, in a little bit of a better way. Sort of all the full, I don't know what you call it, maybe the bearish pivot, right, over the course of a couple weeks there.
Yeah.
The full bearish pivot in March. Here's what you did. Here's sort of the results of that pivot. And I mean,
7 trades.
Seven trades, 7 doubles. Meaning you didn't lose on any of them. That sounds good. Is that good? It sounds good.
Absolutely. And look at how they were all clustered around March 26th, March 27th, March 28th. We were waiting for this. We were ready. We were watching these tops develop, and then we just threw them all out. And that's how, the trades tend to come. And I think the next time we're going to throw out a bunch of trades all in one direction. They're going to be calls. They're going to be on the long side. They're going to be broad market calls, U.S. growth stuff like Palantir, frankly. We'll talk about in a second. Let's go through the free ride ratio quick. So this is something that we coined. All we're trying to do here is determine how often are we selling doubles? Because if we're always selling doubles, it's only a matter of time before we're going to hit home runs, right? So if we get that doubles ratio really, really high, we call it the free ride ratio, then we know this system's going to work. The home runs will come. The big hits will come if we're constantly selling doubles. So this ratio being close to 2 to 1 means that we're selling almost 2 doubles for every one trade that we're not selling a double in.
So these two charts just show the same information, but in different ways. March sticks out like a sore thumb, Steve.
Almost 5.
The free ride ratio was almost 5. So you had almost 5 doubles for every 0. That's not normal.
And it's not that it was a small sample size, right? We actually that was the most amount of trades that we've put on in any given month.
Yeah.
We had 25 trades in March, and 5 to 1 double rate. That's fantastic, right? When we have a high free ride ratio, all it means is that this system is going to be incredibly profitable, right? How profitable is really up to you based on the average excess return. You might have got 1,000% in the XBI. I got 500%. I'm happy with that, right? So it all depends on how you manage like the remaining calls, but the free ride ratio, if it's 2 to 1 or around 2 to 1, really 1.5 to 1, that's great. The system is working.
And you might look at this table and notice that this is going back to July. Today's market very different from July's market, right? In this history here, we've had a bull market. We had that low in August, like Steve talked about, and then we had the bull market kind of come to sort of an end here in the past couple of months. Now we're in a volatile market. It's kind of chopping sideways. We don't really know what's going on, but you can see here that the free rider ratio shows that it's worked in all the environments that we've had, right, in the last 8 months. So
That's it.
kudos to you, Steve.
So what's next, right? Everybody wants to know what's next.
Yes.
And I said at the top of the call, it could be one of two things. We're washed out. We're bottoming. Now, is this bottom going to be an event like 2020? Ended up being a V-shaped bottom, just ripped right higher in everybody's faces, or is it going to be a process, right? Most bottoms are a process, more like 2022, where you get a lot of chop, a lot of basing, building out a nice accumulation pattern that can act as a launch pad for the coming new uptrend. So it's a question of how long does this take? You can see the percentage of stocks above the 200-day washed out in the lower pane, similar readings to what we had at those bottoms in 20 and 2022. So what is the nature of this bottom? We don't know. We'll have to wait and see. What we do know, though, Spencer, is next chart, we are in a highly, highly volatile environment. Right? We are going to get wild swings to the upside, probably followed by wild swings to the downside, and they're going to keep going back and forth. We're going to use tools like the VWAPs, the short-term VWAPs in this next chart, right, to navigate. If S&P is back above 550, back above that VWAP from the all-time highs, it's go time. We're going to be so aggressively long. We're going to start thinking maybe this is more like a V. Maybe this is more like 2020. We'll know exactly what to do. If it ends up that those levels don't get reclaimed, right? Look at something like the NASDAQ. We're going to set the VWAPs from the bottom, the pivot low, and the VWAPs from the Q3 2023 lows to help navigate. If the NASDAQ rolls over back below 450, there's a lot of open space there. It's a really wide range that we're trading in. We could easily head back to those prior cycle highs, back around 400. That's 10% move, right? So we're open to that too. Then we'll come out here and we'll put the put strategy back on. I'm leaning in the prior direction, right? I think we're really going to start going. Maybe it's not an actual V and we go right back to a new primary uptrend, but I think this is going to be a juicy rally and it still has legs. We're going to be looking for some broad market themes in areas that have really been banged up the most and I think are most due for a bounce. We put on one just a few days ago, and it was Palantir. I think Palantir is a great example of what we'll be trying to do as we see that the broader market is healing and rallying higher. Palantir, this one to me, it's called the beach ball effect. Guys, you hold a beach ball underwater, right? You can only hold it for so long. It's trying to get out of there, trying to pop up. That's how relative strength works during downtrends, right? The broader market is not working right now. The tape is a sea of red. However, you can look at names like Palantir. If you go to the next chart, look at the relative strength that this one's been showing through the sell-off, right? The S&P 500 has been, cratering, and Palantir is still basically chugging higher to new record highs relative to the broader market. Eventually, when that pressure comes off the overall market, a stock like Palantir, big S&P 500 name, big growth name, big AI theme name, right, is going to absolutely pop to the surface and it's going to lead the market higher. It's going to be one of those first names back at new all-time highs. I think we sold this double in a day and a half.
I was going to ask you, how long did it take for this one to double?
Day and a half?
Day and a half. And this was last week or this week?
Yeah. And Spencer, if we come in and we're in rally mode Monday, I mean, the cryptos are looking good out here today. We'll see how this weekend goes. If we come in next week, rally mode, there's some news about China coming to the table. Just yesterday afternoon, they waited for the market to close for 3 days. That was interesting. But if we come out big green on Monday, a stock like Palantir is going to be roaring higher, right? And we'll be looking for more and more of these relative strength names and relative strength setups. And we'll be selling quick doubles and similar names to Palantir soon.
And you won't even be thinking about the put trades. You'll be going calls. We need calls. We need to buy. We need to buy calls. We need to buy calls. Right.
That's absolutely right.
And that's how quickly the whole strategy can kind of pivot. Right. So
that's it. It would be the opposite of March, right? Where we were puts, almost no calls. We'll be calls. Now, if you go back, just to be clear, if we get a situation, if you go to the 29, Spencer, more of a rounding bottom, slower base building situation like 2022, that's okay too, because you're going to get monster upside moves, right? So the calls could work, and then you're going to get monster downside moves too, right? And we just walk through, our put strategy with you guys. We'll be ready for that, and we'll be selling doubles in both directions. Might not be as much follow through as you'll get if it's more of a situation from 2020, but we'll at least be trading both directions. So that'll be fun too. Two different environments, two different kinds of strategies, right? Breakout multiplier is great for both of them.
And that's, I think, kind of the beautiful thing is you historically, I mean, we've been in a bull market most of the time, right? So you've
Yeah.
mostly used this in a bull market, but turns out it's good for all markets, right? So
It's always been a great bull market sleeve for me, Spencer. This is something I've been growing and developing over God a decade now, right? And it's the best in bull markets for me historically. But as I spend more and more time with the system, it's ending up being a great sleeve to play any trend and to play any environment, right? It can help you hedge in a time where you want to be short or there's a bear market. It can help you make as much money as possible when times are good. In a bull market, it'll help you play a theme like Brazil or China or some sort of, special niche industry group that you want to play. It's a kicker system, and it's a great sleeve for anybody who wants to make the most out of any trend, really.
yeah, and I think what's cool about it is you've always said, Steve, that this for you is a home run strategy, and I think maybe you want to tweak that. Maybe it's not a home run strategy; it's an extra base hit strategy. Extra base hits include home runs. They also
Yeah.
include triples and doubles, right? You are not looking for singles. You're not looking to walk. These are all baseball analogies. You're looking for the big hits, right? Double, triple, home run, grand slam. That's what you're
You know,
looking for, and that's
it's
that's what you get.
it's a sweetener, right? It's a
Yeah.
leverage system, and I love the market. I don't have enough money to buy all the common stock and everything that I want, right? I go to the options market, I pick up the leverage, I can have just as much exposure, maybe too much in times, to all the themes that I want. So that's the beauty of breakout multiplier. I never sit back in my chair and go, oh, I missed that. I didn't have enough. I always have enough. And that's because of breakout multiplier.
Well, that's because you're selling the doubles and freeing up some capital. Anyway, this is what you get, guys, when you join Steve on his home run mission that is that he's on. You get these new trades. There are new trades every single week, whether it's a new idea or whether it is a management of a trade that was put on last week. He's selling the double. He's rolling it over, right, Steve? There are always things going on, right?
Absolutely. And we
Okay.
talk about it every Thursday, right? All the members come and we have like this big interactive call that they bring their questions. They say, here's how I'm selling my remaining half. What are you doing with this one, Steve? What do you think? Would you buy this one here? And we just go through all of it.
Yeah.
So members are going to have questions as they learn the system, and I want them to have questions, and we hash it all out together on these calls. It's really my favorite part of the week.
So that's every Thursday you do these calls. You also,
Yeah.
when you join, you get Steve's breakout multiplier mastermind that kind of walks through sort of how he uses the strategy in a little bit more depth. There's an options education course there as well. And don't forget rangefinder, Steve, right? This is a platform that was built as basically a real-time trade tracker, and breakout multiplier leverages that because that's where it gets the ideas from. You can see all the trades there in rangefinder when you get breakout multiplier. Normally you need an annual membership to any product. In this case, you don't. You can get a quarterly like we have here, or even a monthly, and you get access to rangefinder
There's a good
throughout.
degree of maintenance on these
Yeah.
trades, right? You need some sort of alert system involved, and rangefinder is the perfect complement to help you kind of track these trades in real time. Make sure you're selling the double, be alerted when you got a multi-bag or whatever it is. Rangefinder will help you do that.
And that's the thing because Steve is great at finding the trades and getting in, but everyone once you're in, everyone is different, right?
Right.
We all have different risk tolerances, and so that was his point about what you make on the upside is in some respects, Steve can help. He can show you the way. He can tell you what he did. But in some respect, I mean, it is sort of up to the individual, and we're all different, right?
Members
So
tell me all the time that they made more money than I did on a trade. And
great. That's great, right?
that's fantastic. You greedy bastard. I wish I did that.
So anyway, we've got a quarterly and we've got an annual. And if you scroll down to this page, click below. You can join. I mentioned the mastermind course, which is a thing that Steve did a few months back.
Yeah.
Basically, kind of answering the most common questions that people had. And
Look,
when you sign up, you also get this. So
let's address that quick, right? There's
Yeah.
a lot of education that goes into this. Nobody should be watching this video thinking, oh, it's options. They're doing derivative stuff. That's too complicated.
No.
This is options 101. This is the simple. We're not talking about Greeks out here. We're not putting on crazy strategies, right? No spreads, anything like that. Absolutely not. They're all single leg strategies, right? We're just long binary trades. Short calls and puts, right? So you don't need to be an options expert, but any degree of education that is required, right, to get you comfortable trading the system, we go over. And it's something that we're always doing. We're constantly doing. Every week, we're trying to educate our members more and more and more so that they're comfortable and can make the most of the system. And guys, I'll tell you, it's not complicated. I'm not an options expert. I don't need to be. Neither do you.
That's kind of what Nick said in the chat here. Nick said, I'm not a big options trader, but this is a relatively simple strategy. He's absolutely right. I'm also not a big options trader, but this is, it is, to what Steve just said, it is one leg. It is you're buying a call, or in some cases, as we just said, you're buying a put, right? That's it, right?
It's simple by design. We don't need any of these complex strategies. We don't want to limit our upside, right? That would actually be counterintuitive to what we're trying to achieve here. Like you said, it's a home run strategy. So we're just long calls, long puts. It's very simple, guys, by design.
All right, so we got the quarterly for 7.95. We got the annual for 29.95. These are all, both special offers. Call it a holiday offer, market holiday, right? So
Yes.
everything comes with a 30-day risk-free guarantee. You don't like it, whatever reason, fine. If you want to know about what else we offer, if you have other products, you want to package them together, there's a number on the screen. You can give us a call. You can also email us. The email is up on the screen as well, and we can talk to you about that. The main reason that Steve, I think, wanted to do this today is because you had never really done the kind of pivot that you did in March, right? You've never really gone full bear with this strategy. You did it and you crushed it. And as we sort of, I don't want to say discover, as we sort of experience, when the volatility goes up in the market, so too do your profits with this strategy, right? So
Yeah.
I think that was the big takeaway here.
And we'll do it again. We've been trading bears with this system before we started publishing it. The
Yeah.
market gave us a really easy, I think, layup on the short side, and we took it. And we'll do that again. We'll do it on the long side. We'll do it on the short side. We'll do it on both sides at the same time, Spencer, if we have to.
I
But really, this system has been so good to me over the years. This is my baby. I'm so proud of what we've built and what we're doing here. And I hope you guys all come and check it out because this environment was really built for Breakout Multiplier.
couldn't have said it better myself.
Okay, right.
Couldn't have said it better
What?
myself. And Nick in the chat, the genius is the simplicity. It's really artful. That's it. I think that's where we'll leave it. So we'll send out the replay. Make sure everyone gets that. But Steve, this has been great. Keep on crushing it with the calls and the puts, or the puts and the calls, and we'll have to see how the market shakes out.
Thanks, Spencer. Happy Friday, everybody. Have a great weekend.